Well, good morning, everyone. My name is Dennis Trainor, and I'm the chair of the Joint Authority and Canal Corporation's Audit Committee. Welcome, members: John Koelmel, Michael Cusick, Louis Warren Jr., who's joining us by video this morning, and Laurie, Wheelock. Welcome, NYPA staff members who are participating. This is a scheduled committee meeting, which has been duly noticed as required by the Open Meetings Law. And I'll call this regular meeting to order. We'll begin with the adoption of the agenda. Does any other committee members have any amendments to the proposed agenda?
So moved as presented.
Is there a second?
Second.
All in favor?
Aye.
Any opposed? Motion carries. I'm gonna ask Salman Ali, Senior Vice President of Audit, Internal Audit, to present the next two items. Salman? All right.
Good morning, trustees, NYPA colleagues, member of the public. Delighted to be here for 2025 first audit committee meeting. Today we'll be going over two items on the agenda. First is going to be the 2024 audit update as we wrap up the year. Wanted to share in terms of the results. We have two members from our team who will be coming on the stage to provide a thematic update on what we've seen as part of our 2024 audit plan. And then, we'll be then going over the 2025 audit plan and our forward-looking internal audit strategy. Next slide. Next slide. So this is our IA scorecard. We are well on target to meet our completion. We're actually at 98%. These slides were published on the 13th, so we've issued number of reports, 4 reports in final stage of issuance this week, so which will bring us to 100% completion by March 31st in terms of the target we've set. So I wanted to give a big kudos to the team and tremendous effort on behalf of management to get us where we are. It was definitely a stretch, me coming on board and getting up to speed, but I'm really proud of the team in terms of the delivery and the excellence we've shown in terms of meeting our target. Our team utilization stands at 79%, well above our target. Which means we're being efficient and executing the plan. In terms of our operational excellence, we've done well to meet our operating targets. One stat we publish is the percentage of audit deliverables with opinion. We had 3 high-rated observations issued this year. Most importantly, only 5% of the opinion was considerable improvement, and this is down from 10% from last year, from 2023. So which I would say indicates a strong risk management culture. It's in terms of we'll share the issues as well in terms of how we progress in terms of getting good results from a risk management perspective. We're also making good progress on our QAIP. In December, we had shared our external assessment, which had a few items we had to execute upon. We're making good progress, and we should be able to wrap up the action from that assessment by June 2025 of this year. And we've included the details in the appendix, so on the plan status. Any questions? Go to the next slide. This is an update on our observations. I think one of the key highlights is that we have seen a downward trend in terms of overall number of observations. So the prior slide, I made a comment in terms of just good results in terms of risk management, low number of high-risk observations. The observation closure rate remains strong. We've been able to close a lot of issues, indicating a good issue management process. So again, I want to kind of give a kudos to all the EMC members on their collaboration and bringing these issues to closure on a timely manner. We did have good discussions on, issues we've had to follow up on from, past due. Obviously, we don't have any past due issues. So knock on wood, that's a testament to the collaboration we've formed with management in terms of, having these issues close on time.
That's great news. Nice to
Yeah.
see. And remember, well, we used to be talking about multiple years up there, so that's great.
Yes.
So well done, everyone.
Yep. Go to the next slide. I will have, like I mentioned, 2 members of our team. This is, we think about, obviously, kind of give some background. We think about, high level, what are the areas where, we've kind of thematically seen progress, and we're wanted to share in terms of, thematically, big picture 2024. We have 2 themes we want to kind of talk about, so we'll have members from my team talk through it. So call the sheet on the screen.
All right. Good morning,
Good morning.
trustees,
Good morning,
NAPA colleagues, Canal's colleagues as well, and members of the public. I am Nishita Modi, Director of Internal Audit. So as Salman mentioned, we've had a successful completion of 2024 audits. And so we've taken a look back at the hard work that the team has performed to see if there were any common threads. And we've highlighted 2 key themes. So today I'm going to be presenting the first theme, which is the environmental health and safety, or EH&S for short. So since assuming the responsibility of the EH&S compliance audit program in 2021, the team has primarily, our main objective has been to evaluate compliance across all departments, recommend improvements, promote environmental stewardship, and strengthen the organization's health and safety culture. So in 2024, we performed 4 EH&S audits. The results were generally positive, with no significant activities that would potentially pose substantial EH&S risk to the organization. However, we highlighted 2 areas of improvement that you see on the screen. The first one is operational management, and the next one is EH&S training. For operational management, we emphasize the importance of safety and compliance with environmental standards through strengthening our inspection protocols and enforcing those inspection protocols as well, improving our materials management activity. Both of these would help, would result in an improved and enhanced asset maintenance and regulatory compliance. We also recommended enhancing our oversight of third-party service providers by strengthening and redefining our undefined or unclear roles and responsibilities, as well as reinforcing the agreed upon contract terms. In terms of the EH&S training, we made recommendations to bolster the EH&S training program, which has resulted in an increased awareness of evolving regulatory requirements, as well as compliance best practices. So these themes or areas of enhancements map to the workforce health and safety enterprise risks for both NIPA and Canals, as well as our approved risk appetite levels. I do want to mention that the business has been highly receptive of these recommendations and has made great efforts to quickly address open items, thereby reducing the overall EH&S risk profile for the organization. These themes will be foundational as we look forward to 2025, and will place a focus on continuing these improvements. I did want to end by saying that these insights have enabled us to collaborate effectively with our stakeholders. By having a common understanding of managing these risks, we're able to better support NIPA's continued success. So with that, thank you, and I'll open it up for any questions. Okay, if not, I will hand it over to Ignacio Bullrich, who is
Can
going to
circle back.
cover.
I know, I got a question on third party, but it ties in. You guys. can
It
go
does,
ahead
yeah.
and then
Great,
we can talk about it.
thank you.
Good morning, everybody.
Morning.
Trustees, NYPA colleagues, members of the public. I'm Ignacio Bullrich, Director of Internal Audit. And the purpose of today is to highlight some of the improvements that are going to be made to our oversight of third parties. As you know, third-party risk is a key enterprise risk for NYPA, and we dedicate a significant portion of our audit plan to evaluating how NYPA manages this risk. So, but to begin, I want to acknowledge some of the significant effort that's gone into building out our third-party risk management oversight practices. They include a robust onboarding process, a thorough evaluation of the cyber risks of our bulk electric system suppliers, and a diverse supplier base. So as a result of some of the work that we have completed, management's going to be streamlining some of the processes related to the Service Organization Control Review Program. It's a mouthful. But these control reports are important because they help us understand the control environment at our third parties. We'll be advancing the use of data analytic tools and software to increase the transparency and monitoring capabilities, making sure that the data that we have today is managed at the appropriate management levels to help us better assess supplier performance and operating stability, standardizing documentation, improving the review requirements to ensure that the reporting that we do get today continues to be relevant and useful. And finally, to the third-party contract oversight item that Nishida mentioned before, reinforcing, a consistent approach across business units and how we evaluate the agreed-upon terms for our contractors. Most of these actions are expected to be completed by the end of this year, with full formalization by Q1 of 2026. So I will open it up to any questions, Mr. Chair.
So I'm curious, have we had fails on the third, have we had issues, or is this exposure that you guys see that just needs to be tightened up?
I think it's advancing what we already have today as a foundation. We have a lot of data in the organization. I think it's maturing how we use that data to help inform us on how our suppliers are performing. And
Are the right controls in place that just aren't being enforced or monitored or followed, or you're looking for more controls? I'm just trying to get a sense of where we are today.
I would say it's more controls. I don't think we found significant control deficiencies, but it's building out what we already have.
And I mean, I don't know, this is probably more for Joe or others. I mean, how much are we leaning on suppliers? And I mean, I remember going way back to, I don't know, what was it?
Way back.
SAS 90, whatever, we used to issue special reports, third party, all the rest of that stuff. I mean, do we really lean on our suppliers and we, call them out and disqualify them and all the rest of that if they aren't stringent enough, don't meet standards? I mean, are we rigid
Yes.
with all of that?
Yeah, we've really been building out
I'm gonna do his
the,
Joe imitation.
We'll tag team.
well, I think it's really,
Joe from here.
well, I think it's really fun. I mean, things that they're mentioning is really a function of SSM.
Okay,
And, what we're doing is, we've been building out a lot of the controls around third-party risk, something we're very much on top of. It is definitely an emerging area of risk for us. And a lot of things happen on the intake
yeah,
when onboarding new third-party vendors, a lot of review. The area I think we have to tighten up on is on the annual follow-up. So for example, there are two reports, a SOC 1 and a SOC 2. One is used for cyber IT. The other one is for reliance on their own internal control procedures. So we get those reports when we onboard a new vendor. We need to do a better job of following up every year to get those updated reports. And that's where we've done a lot of tightening up there, but we're spending a lot of time really managing this third-party risk. I don't know, John, do you want to add anything to that?
Then on just the day-to-day, when we do receive invoices and itemize, we're just working with Dolly's group to get a little bit more controls on going through with a finer tooth comb, making sure that that everything in there is accounted for. So there were some findings that were very mild in nature, but just were, I think, evidence of the resolution that we're looking in there, and we're trying to get a little bit better at that. So I think putting the controls in place for that as well.
Do we independently validate? I mean, do we rely merely on what they provide us, or do we independently validate with key suppliers? I mean, obviously, you guys know all this. We can be best in the business, but you get a third party just blows us up, with, lax controls or whatever. So I'm just a bit of Captain Obvious here, but just trying to understand where you guys think we are in light of all we've got going and more that we'll be interacting with.
Yeah, let me just add, I mean, I think we're sort of triaging this work here. As you may recall, in earlier presentations, Adam and his group has built out a really robust business controls effort led by Dolly Jimbit behind me here. And so it's really a partnership between business controls, internal audit, and SSM as we look to address these issues. I mean, Alexis has identified third-party risk in her risk scoring and so forth. So, everybody can always get better, but I think we're doing a great job of keeping an eye on this, and we're working with internal audit to even further enhance the work we're doing.
Well, just that has been highlighted as a common thread. I'm just trying to get some context as to where you think the relative exposure is at this point.
Was that a question? Sorry. I do think we.
I want to get us. Do I have to end it on a more honest with a question?
I do think we have a good foundation for managing our third parties. I think there are enhancements that can be made, as in any process. We have a lot of data. I think to the extent that we can continue to use analytics and other software to build that out, I think it'll result in positives for NYPA.
Okay. Thank you.
Any other questions? All right. Well, thank you for your time.
Okay, there was no vote is required on the 2024 internal audit update. Next is Salman that will give us present the 2025 internal audit plan and strategy.
Yeah, quickly just end up on the required communication. These are required. I just want to kind of maybe highlight the charter was updated to align with the new standards. So we went through the process. That was one of the recommendations from the assessment, and then kind of call out the approval of that charter as well as part of the consent agenda. So these are our required communications. If there's any questions, you let me know. Okay. We'll go to the next presentation. Right. So as part of our 2025 audit plan, next slide, please. Wanted to just quickly walk through the rigorous process we went through. It's a 3-month process, which, we start in October. We talked to pretty much everyone in the organization. We talked about 90 plus stakeholders, senior members of the staff, EMC. We looked through various kind of materials from the committees, our participation, and then we also look at our 2024 audit results, what we've seen, strategic priorities, Vision 2030, looking at what Gartner is kind of highlighting as part of their hotspots, any industry benchmarks, and then that drives the process for us to then perform risk assessments. So our audit universe is about 56 entities. You call that, business units, or it could be just distinct projects. And then we do a risk assessment on each of them. So our 2025 plan, which I'll go into more detail, we have about 41 audits, which address, our strategic objective, key risk and emerging trends. Next slide, please. This is a little bit more background in terms of our process. We look at, as part of our risk assessment process, we look at various risk factors, including financial risk, legal, compliance, operational, cyber. Like I mentioned, these risks are adjusted for any new entities, any organizational changes, and strategic kind of priorities. In terms of cycle, it's similar, just education on the number of years. So, we have a cycle for high, medium, and low. And that's pretty standard in terms of the industry frequency each entity gets looked at. So we have about 100% coverage on high and medium within this cycle. And then any low rated entities are based on the risk, we bring that in as well. Next.
As you looked at this, always, I feel like there's an inherent disconnect between a 1 to 2 year frequency schedule for high risk business units or auditable entities. In your experience, prior lives, you're comfortable with that frequency as opposed to, well, it's high risk, we've got to look at it every year. Talk to me a bit about that.
No, great question. So we, this is our guardrail. We do bring in some entities which are higher risk into our audit plan. So this is the frequency is a guidance for us, and this is very standard in terms of what I've seen in my previous lives. It gives us flexibility at the same time. Any urgent area, we bring that in to the audit plan.
Okay. So I guess, well, that's fine. Go ahead.
Yeah. Next slide, please. So this is just, recap, our plan is highly focused on our strategic priorities, top enterprise risks. We've got about 56 entities, like I mentioned. And I think one of the key thing is to highlight that, this is, a plan which is adaptable to changing risk and allowing us to reprioritize real time. So we go through a continuous process to do the risk assessment through the year. So if something, say, bubbles up to a high risk item, we'll bring that into plan. So we have the flexibility in hours allocated to, assign resources on, maybe an emerging risk or maybe a new project which comes on board. So that's something definitely which we have on our plan, as well as, we're looking to continuously obviously use automation and analytics to augment our plan. Next slide, please. Wanted to kind of spend a little time in terms of, thematically, we have the audit plan details in the appendix, but, essentially, these are the areas which, we'll be focused on, thematically, in critical infrastructure, that remains foundational with focus on reliability and compliance. Employee health and safety, we talked about that as a theme from 2024. So that's going to be something which is going to be, an area, we'll visit frequently this year with high risk sites, doing safety audits, looking at OSHA compliance. Another area is our project execution and financial oversight. As NIPA, drives these large case initiatives, we'll be looking to evaluate some of these, initiatives such as Project Hub to ensure there's strong governance and financial compliance. Renewable energy, that's, a big area of focus, will be a big area of focus and is currently, as we kind of move into clean energy transition, our audits will align with the work which Wheelock team is doing in terms of the operating model and sustainability goals. Enterprise technology, we've heard about Project Illuminate, so we are going to be looking at that as part of our audit plan and other, in enterprise transformation efforts. Cybersecurity, that's always a top risk, and I see that being an area where we will, continue to look at, program maturity, the good work Vic is doing, and we do have a cybersecurity program review this year where we're going to be looking at just overall program in terms of, how that's progressing. And then last item we had on the agenda is workforce development. We'll be reviewing the program, especially equity and access, the selection criteria. I know this has been a topic for discussion. So that's going to be in your area of focus for us in terms of the spend and how that grant money is being distributed. So this is, this thematic structure ensure the plan remains responsive to NIPA's mission, and then also making sure we're anchored in our key core risk areas. And we've included the details of the plan in the preceding appendix.
So renewable energy, that's a new component of the plan?
We did have renewable energy as part of our 2024 plan, but now that's a lot of that that was more kind of the planning, the initiation of the process. This is going to be more focused on the actual execution, right? So we'll probably maybe pick 2 or 3 projects and look at the adherence to the operating model.
And the workforce development program, that was in the old plan as well?
This is new.
That's new. Okay.
That's new. Yeah, that's net new.
Okay, good.
Yeah.
Good.
Right. So we'll share some statistics in terms of the audit plan from prior years. Our plan is 73% is full audits. This is a benchmark for us to make sure our audits are above the 65% benchmark. As we go through a lot of change, as there is a infrastructure spend, we are increasing the number of quick impact reviews and advisory work, because obviously the organization is going through a lot of change, strategic vision 2030. There's going to be a lot of work we're doing to evaluate some of the projects which are coming from that. And we're consistent with our prior year number of audits, but obviously higher on the advisory and the quick impact reviews. The next slide. This is a view on enterprise risk. We're fully aligned with top enterprise risk. In terms of risk appetite scores, we're continuously monitoring the metrics coming from enterprise risk management. Obviously, a critical area of focus for enterprise risk is critical infrastructure, third-party workforce safety. So we'll continue to adapt as the enterprise's risk changes and make sure we're completely aligned with the top risk. I wanted to spend some time on the resources in terms of our audit plan. We've got the headcount we need. We do have an ask for about 34,000. We've added about 36,500 for core source. This will ensure we're able to meet the plan. One quick highlight is that the core source hours have, it was about 4,500 in 2024. So we brought that down because we've been able to hire. And the good news is that in December we spoke, we had about 3 open positions, and we were able to fill 2 of them. We have 1 open position. So that will move us to more doing the work and really bringing the subject matter expertise from our core source providers for areas which are really kind of niche in nature, like cybersecurity or data analytics. So I'm proud of the team and the recruiting team to help us achieve those objectives. And then we've got hours allocated for training, QIP, IA strategy, and any special projects.
Well, it's great news that you're filling, cheeks in the seats. That's great.
Yes. Yep.
And you're comfortable, you're bringing the in-house expertise you need versus Deloitte or, on the external. So
yeah,
no compromise there. Good.
Yes.
Okay.
I think we're on a good, and we'll talk about the strategic plan in terms of our strategy. So go to the next slide. So in terms of, me coming in, obviously taking a fresh perspective on, where the function is, we started a process of kind of really brainstorming sometime in November to think about, the function and, what are the key priorities, right? As in terms of our function, how do we align with the organization? So we came up with, these, I would call them these 3 kind of areas of priorities. We obviously are strong in innovation. Innovation has been, we've talked about the AI approach, but we are excited to adopt a lot of the cool technology which Rob and team is producing as part of the project. Luminate, using Athena, and kind of using that more for our audit processes, right? So being able to use some of those tools to augment the work we do. That definitely is going to, through the year and two, is going to bring definitely efficiencies and getting results faster in terms of the testing we do. The second area for focus, which is more of a shared priority, I would want to highlight with risk and IBC, is to look at alignment assurance, right? We do a lot of great work between audit, compliance, IBC, risk, and we want to kind of look at activities we do through the year, right, and reduce some of that burden on the business. So our goal is to kind of have continue that dialogue with our partners and align ourselves with the enterprise risk management, enterprise risk taxonomy. Leverage some of the tools we have, like Archer, cross-functionally, to align on reporting and the taxonomy and how we report. So that's going to be exciting partnership with our colleagues in risk and IBC. People development, that's near and dear to me. I would say, we've got a really good team, but we're looking to optimize our resource allocation. We talked about some of the spend we have on outside consultants, looking to cross-train our folks internally to bring some of the expertise in-house, more training, being able to kind of cross-functionally have folks work on different pods. So the way our structure is our team is structured, we have pods, and the pods are focused on, say, one pod we're focused on IT, another pod we're focused on compliance. We'll have pods which are now cross-pollinating us. So we'll kind of have people kind of go on different pod to experience maybe a project in infrastructure, right, or doing site reviews. So that will give us a more breadth of experience in terms of how our resources are being utilized within the team, and at the same time, them being able to learn from our different colleagues in the organization, and then looking at our capabilities, doing a deep dive into our current capabilities. That's something we're partnered with Gartner on in terms of the gaps we have and where do we need to focus on from a training perspective. And then last one is more around, I would say, reporting and stakeholder communication. One of the things when we were doing the thematic issue analysis, what we presented, we didn't have the data, right? So we had to look at a lot of data within our repository. So kind of looking at our existing tools on how we can kind of, at a click of a mouse, do more thematic analysis, right? In terms of what are the large themes we're seeing, being able to report on them, standardize our communication, and then also the reporting we provide. So very excited for this initiative. It's aligned with our Vision 2030 strategic priorities to kind of modernize and be more digital, and really embrace technology, right, and having a unified view of risk across an organization. So,
No, excellent.
yeah,
Very good.
So we have a adoption on the audit plan.
Anyone have any questions, trustees? Ask for a motion.
Yeah, great, good story. Appreciate it. Glad to
Thank you.
see good progress in short period of time, and kudos to you and the team for solid execution last year and exciting blueprint to go forward. So well done.
Thank you.
Yeah, I'm
Thank you for your
happy to
support.
move the plan
Okay.
as
Do I-
presented, Dennis.
Do I have a
Thank you.
second?
Second.
All in favor?
Aye.
Any opposed? Motion carries. Hey, thanks, Salman. Great job. Great work. I'll now ask Adam Barsky, EVP and Chief Financial Officer, to present the next item.
Small piece of paper. That's good news, Adam.
Not a lot.
Not a lot on there.
When you have a pretty good year, it's not a lot to explain,
There you
so.
go.
Yay.
But good
Tell
morning,
us about last
trustees,
year,
colleagues, and members of the public. Yeah, I think we've been through these numbers and obviously in more detail. Here is sort of a summary, but this is actually a comparison from 23 to 24. As I've mentioned before, we were ahead of our target and ahead of last year in terms of net income by $29 million. What I would say here is that we also did better in terms of what I call quality of earnings, where a significant increase came from operating income rather than non-operating. So not only higher, but from, our business generating that income, which is also a good sign. And again, these are audited now, and we'll hear from KPMG later. So these numbers really haven't changed from the ones I presented towards the end of the year in any material way. Any questions on that? Next is just a summary of our consolidated net position. And the debt to equity ratios are still very good. For rating agencies, these are on exclude the SFP bonds, it's on NYPA general obligation bonds, but still at a very good number. The most important thing here is that our net position, or our equity, if you will, has increased to 5.234 billion. So what does that mean? When we look at how much debt we can issue to maintain our FERC weighted average cost of capital, we cannot exceed our net position by debt. So if we can issue more debt than net position, so when net position does go up, that gives us more room if we need to issue more debt. So it helps our capital capacity. But other than that, there's really nothing major new here. We keep adding to our capital assets as we do with the transmission work, but nothing really major here to go into further depth. I would go now to the balance sheet. Can you go back? What's the?
That's where you were.
Yep. Okay. Go to the balance sheet. Sure. There. No.
You just took us through the balance sheet.
Okay. So so this is also net cash flows provided by the operating activities. Again, pretty much in line with last year. Some of this reflects the fact that we also issued debt last year after also defeasing some of that taxable debt, then issuing tax exempt debt. But again, there's no major changes here. So, the good news is the business is earning well ahead of our target. The balance sheet remains very strong. Good liquidity to undertake all of our strategic priorities. And, we keep moving in the right direction, execute our plan. Any questions?
You guys, can you give us at some point some industry numbers? I mean, as I'm looking, Chris, roll that back. So we don't see a balance sheet that often here, which so it's great to see this. I mean, an $11 billion balance sheet underscores the size and scope of who NYPA is and all the rest of that. I know, Adam, just off top of your head, where does that put us? And when we talk about, our relative profile from an industry standpoint, but just quantitatively, how does this position us? Top third?
I'd say higher than that. Yeah,
top, whatever.
Yeah, I would say top, definitely top quartile in terms of LPPC. I mean, we are the largest of state-owned public utilities in the country, and we belong to the large Public Power Council, which is made up of the 28 largest ones, and we're the largest of those. We, as far as our credit rating, a AA+, there are none that have a higher rating than that. So we're in a good position that way. We do share with them a lot of data, and they do provide a peer analysis across that group in terms of, our expenses on transmission or generation or a lot of other key information. So we monitor that peer analysis as well as other industry analysis. And I think we're always in the very top quartile at the minimum.
I don't recall seeing some of that. I assume it had to be there.
Yep.
So
we
finance committee or something.
Absolutely.
If we could see some more of that, peer-to-peer comparison.
Absolutely.
And how we're performing.
That's a great idea. We'll come back with that. Like I said, we share data with LPPC, and they do put out this, as well as Fitch does a report every year as well that looks at peers across their rating universe, and we always score very well on those comparisons.
And we could add to that, Chairman. I think the American Public Power Council, to give you what the entire public power universe looks like. I think it's 2,200 or something public power entities around the U.S. and the investor-owned utilities would be all over the place. The Con Edisons would be, of course, bigger, but there are investor-owned utilities around the country that would look look like us or maybe even, smaller, but we'd be happy to, all that data is readily available, right,
Yep,
Adam?
absolutely.
It would be good to give us, I think, just to carve out some time, maybe next finance committee, give us
Sure.
a little bit of drive-by in that, create some context. I mean, I'm assuming we'll stack up well, but same time, maybe there's areas that you say, okay, how can we do, perform better or whatever, but,
Absolutely.
okay. Yeah, because big business, you guys do a great job of running a really big business, so, yeah, want to make sure that doesn't get lost on any of us.
Yep, and then, in the financial report that's in the materials, there's a good year-over-year comparison on all the different
Yeah.
metrics and areas. This is the first year in the last several that we have a comparative financial statement. As you recall, in past years, there were some significant accounting changes that led to us issuing standalone year financial statements, but this year's financial statements has a multi-year comparison to take a look at. So it is good information to look through in the management discussion and analysis.
MD&A is always terrific. You guys do a
Yep.
great job with that.
And then just as a housekeeping, so you're required to approve these financial statements based on Public Authorities Accountability Act, as well as approve the filing of the 2800 reports, which are, detailed information we provide to the public authorities budget office in Albany. They collect all the information from all of the authorities of the state, and it has a listing of, a lot of detailed information there with us and all the other authorities. So upon your approval, we will file those reports as well as required in the statute.
Any questions from? We have a motion?
No reason not to approve them, right?
Nope.
Okay, good. All right, based on our CFO's recommendation.
Absolutely.
Michael?
I'll second.
All in favor?
Aye.
Opposed? Motion carries.
And, again, just thank you to the team and the people around NIPA in terms of through the audit this year. You'll hear from KPMG, but I believe that we continue to make progress every year in turning around their requests, their information, and making the process continue to run smoother, even though, our statements are getting more complicated as we add these subsidiaries and all the different things that we do. So it's great that people are throughout the organization are assisting us in providing whatever's needed for the auditors. So I've seen a lot of improvement there.
Thanks, Adam.
Well done, Adam, to you and your team.
Okay, next I'll ask Chris D'Angelo from KPMG to present his report.
Get two Chris's.
Two Chris's.
No.
Oh, Ryan, sorry. Apologies.
That's okay.
We thought it was too confusing at the last meeting to have Chris D'Angelo and Chris Lavanzo,
Right,
so
exactly.
I've subbed in Ryan this time.
Okay,
so.
good.
Good morning, everyone. Good morning to the trustees, management, public. My name is Chris D'Angelo, KPMG partner on the financial statement audit of NIPA. And this is Ryan Gibbons, senior manager on the account as well. First off, happy to say that we're on track to issue our audit report later this week on the financial statements that Adam just took you all through. Just want to echo a couple of his comments as well. Great coordination with Adam and Sandeep and his team. We got a great, what impressed me the most, and this is my first year as a partner on the engagement, was such a high quality set of financial statements so early in the audit process. So credit to Sandeep and Adam and his team to get us such a great set of financial statements that allowed us to review upfront early, provide high quality comments back to his team. And we're again on track to issue our financial statement, our audit report on the financial statements timely. We are going to issue an unqualified report. So as is typical in the past, but just want to reiterate that fact. Ryan will take you through the details of the slides. Substantially all of these is required communication. So some of it may seem a bit on the drier side perhaps, but these are required.
Come on, never. This is riveting. Come on. This is edge of the seat material here.
You said it, not me. So fantastic. But these are again required communications that we are to just communicate upon issuance of our audit report. So Ryan will take you through that. Then I'll circle back at the end and happy to answer any questions that the the board or management or whomever may have. So with that.
Yep, that's good. Everyone, okay, so I'll take you through the slides now. What you're seeing now is just our audit results and overview as of when this presentation was prepared, March 14th. We still have some outstanding matters such as completion of some of our audit procedures as well as partner and manager level reviews. To date, no findings, since then. We will complete our final tie out of the financial statements themselves, as well as receive a management rep letter, and as well as the in-house legal letter. As I mentioned, no significant findings yet. As Chris mentioned, we'll issue an independent auditor's report on the financial statements, a report on internal controls over financial reporting with accordance with government auditing standards, as well as an independent auditor's report over the investment compliance requirements as part of New York State. As you can see here, this is your client service team. This was presented to you in December. No changes, to the team other than Chris presenting in December and me presenting now. My wife was in labor at the time, so sorry for missing. But yeah, no, going forward, it'll be this standard team here. Next slide. Next slide as well. As Chris mentioned, we're just going to go through some of the required communications here. I won't list all of the items here. As you can see, there's not really many items to report. No significant unusual transactions, no uncorrected or corrected audit misstatements identified, no new non-GAAP policies to disclose. I will go through some of the accounting estimates on further slides. No new related parties to disclose, no going concern issues or significant subsequent events, and no disagreements with management or other significant matters. Next slide. Just some, additional required communications, no consultations, no illegal acts or fraud identified through our audit.
This was a snoozer. Come on.
We like these. These are the good ones.
No fun.
Written communications we will provide. You've had the engagement letter. We will provide you with a copy of the management representation letter upon the issuance of our report. And we'll go through some of the independents and inquiries on the further slides. As I mentioned earlier, we do issue an internal control related audit over financial reporting within accordance with government auditing standards. We don't issue a report on internal controls as a whole, but to date, through our audit of the financial statements, there's no material weaknesses or significant deficiencies to note. As mentioned during our planning meeting, most entities, if not all, have a significant risk of management override of controls. We mitigate this risk through some of our journal entry testing and procedures. We examine the entire journal entry population throughout the year, and we apply high-risk criteria to the journal entry population and look for outliers and certain descriptions and routines there. Happy to report no matters to identify for the journal entry testing. So now I'll get into some of our significant estimates. As I mentioned, the first one we'll go through is the other post-retirement benefit obligation, which is OPEB, accounted for under GASB 75. Management utilizes a third-party actuary to value this liability. KPMG then comes over the top and we utilize our own actuary to review the key valuation and assumptions. No matters to report. We also perform testing over the OPEB plan assets, confirming with the investment custodians the values at the year end. And we also ensure that the disclosures related to GASB 75 required were complete and accurate in the financial statements. The next estimate we have, if you go to the next slide, this is the pension liability, very similar to the OPEB plan liability. This is accounted for under GASB 68. The authority is part of the New York State local employees retirement system. We test the census participant data, which is an input into the valuation, and this gets submitted directly to the retirement system to determine the authority share upon completion. Again, we use our own actuary to review the valuation of this plan and its key assumptions. And as well, we ensured the disclosures related to GASB 68 are all included within the financial statement and complete and accurate. The next one we have is the valuation of marketable securities, basically all the investment, the portfolio through the authority. We send confirmations to the investment managers to receive the values as of year end. And once we do that, we get our own national pricing desk to value as of December 31st, all the investment portfolio. So it's pretty much a 100% testing over the investment portfolio. Go to the next slide. Now I'll go through some of the other significant audit areas, one of them being long-term debt. We test the authority's debt roll forward activities such as the issuance, deficiencies, and repayments. We ensure the authority complies with all debt covenants throughout the year. As of now and through this audit, there's no matters to report over the debt process. Next slide. Now we'll go through capital assets. We perform testing over the capital assets roll forward, including additions and disposals. We select a sample of additions to the construction work in progress and receive invoice and payment support to determine whether there's any errors or instance of illegal activity. Happy to report no instances were reported or found during these testings. As far as an additional procedure we perform with capital assets is the associated depreciation expense. We develop an analytical expectation in comparison to total assets year over year. No significant findings in that area as well. Now the big one would be revenue. You can see here that we pretty much test revenue to death. We confirm accounts receivable balances with the CNE and wholesale customers. We confirm the gross and net settlement amounts with customers as well. We test all of management's various reconciliations performed throughout the year. And then we perform some detailed testing over the transmission revenue as well as the UCAP revenue. And in accordance with the NISO, we have constant communication with the NISO as well, getting their invoices from both management and from the NISO, and performing tests over that within the reconciliation. There's a lot on here. If there's any questions, feel free to bring them up at the end. No matters to report relating to revenue, which is most important. This next slide, it looks a little different this year, but these are our required inquiries that we'll need to have with the committee. Most likely through executive session, we'll ask some of these questions, but feel free to bring them up to us as you see. We had these inquiries with some of the members of management, and nothing to report that hasn't been already disclosed. That concludes our presentation. There are some additional focus areas along in the back of the presentation that includes some areas, for the committee's reference, as well as our firm's audit quality report and our transparency report, that these reports can be provided upon request, as they was too long to include in the presentation materials. So now we'll open it up for questions.
Any questions?
So smooth sailing.
Yes, I'm happy to report. As Chris mentioned, though, getting the financial statements timely was key. They were in great shape. Kudos to Adam and Sandeep and his team as well. They have good set of people, for sure.
Very good. Thank you very much.
Thank you, Dennis.
Chris, you're back up or no? Well,
Do you have anything else? Any other questions, for either one of us? Nope.
Questions?
Great. Thank you.
All right. Thanks, guys. Appreciate it. Adam, Sandeep, kudos. Well done. All right. Nice job. Adam's usually hogging a spotlight, Sandeep, so want to make sure you get due recognition here. I'm looking right past him. I don't even see him. I just see Sandeep at the end of the table. So way to bring it home. Way to stick the landing and all that good stuff. Okay. Adam, as always, you had a great job. Well done. Well played.
Okay, there was no vote required for that particular portion. Next, we're going to have the consent agenda. It's now before the members for adoption. I ask for a motion to approve the consent agenda.
So moved. Second.
Second, all in favor?
Aye.
Opposed? Motion carries. Next portion of the meeting will be held in executive session. The meeting will resume in open session in about 3 hours and 22 minutes. Oh, maybe 15 minutes. Yeah, a little joke, John.
Yeah, I like it, Dennis. I like it. Little Larry, you're coming around here for all this time. All right, I like it, Dennis. I mean, I like the style. Little shtick.
Now I'll ask for a motion to
The 3
conduct.
hours, you never know. It could be a while. It depends how this goes, you know? They're gonna quiz us, Dennis. You see the test we gotta get through there? They put the questions up. It's gonna be a grilling.
No, not yet. Ask for a motion.
So moved.
Conduct- All right, second? Okay. All
We
right,
need a
we're-
judge to keep us in line.
all right, motion carries. We're now in the executive session. Okay, now I'll ask for a motion to resume meeting in open session.
Second.
All in favor?
Aye.
Opposed? Motion carries. All right, the next meeting of the audit committee is scheduled to be held on Tuesday, July 15th, 2025. I'll ask for a motion to close the meeting. Second, all in favor?
Aye.
Opposed? Motion carries.